Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Bangalore. It was great meeting you guys on Saturday. Some of you who did manage to come to the event, meet and greet, and we had a lot of interesting conversations around investment, about personal finance, about bonds, of course. And those of you who are still chasing answers about bonds and who are still very confused, do reach out to me on the WhatsApp numbers and the Instagram. You can come over there and join the group if you're on Instagram, or my WhatsApp number. I'll ask Rupesh to put in the QR code somewhere on the screen now. You can scan the QR code and come to WhatsApp and message me on WhatsApp, and I'll try and get my team and me to help you out with your queries of bond and get you set up. Today, as we were discussing on Instagram, I had put out a poll asking you what would you like me to talk about today, and what got voted up was all about Toyota, Honda, and what is happening in EV. Recently, we saw Tesla with what's happening with Musk and Trump, the feud which has erupted between the two brothers, or father and son, whichever you say this weird relationship, has really hurt the Tesla share owners, and they're taking a beating. Musk seems to be shrugging it off. But as a Tesla owner, this kind of volatility is not good, where you see the PE ratio, to give you an example, would go from anywhere from 100 to 160. That's a massive swing in price. So this is something a lot of you have been worried about. I do believe maybe there is some sense in waiting and approaching this whole AI thing, and Apple's approach may be pretty much close to what Toyota and Honda are doing when it comes to EV. And I'll explain this to you. By end of the video, we'll walk in through the numbers where Toyota is sitting and Honda is sitting, and then we will see if it should be a value buy at that proposition. But of course, before I dive into all that, as always, I'd like to first hit upon your questions and comments from the last video, which I always enjoy doing and giving my insights into the questions you've been asking. I do try and club them together because the question seems to be overlapping, and I would like to keep it concise as possible and don't want to spend too much time on giving my answers to your comments. So this is something Mukesh, Satish, Gayatri, Waris, Gautam have been asking. They seem to be really into the bond sphere, as I say, and they've been asking me a lot of questions about bond, which platforms to use, what to look at. Well, if you're in India, there are multiple bond platforms. I don't use any of them. So since I don't use any of them, I cannot say, is it good, is it nice, is it easy or not? I really don't have a clue. We do have our own ecosystem is where I am in. And if you're interested in that ecosystem, like I said, reach me on WhatsApp or Instagram, and I'll look at how to get you set up. But there are passive funds, like passive index funds. There are passive debt funds or bond funds in India, and some are the ones which you can look at if you don't have capital for bond, because bond usually you have to look at around 1 lakh to buy a bond outright in your name. But if you don't have this and you want to take some exposure into bond or debt market as a hedge, there are a couple of passive bond funds. ICICI Bharat Bond FOF, which tracks the Nifty Bharat Bond Index, and that's supposed to be passive. Then Edelweiss PSU Bond Plus, that is an open-ended maturity targeting bond, which is also an index kind of fund. So both are passive. But I don't know, if you do have only small pockets of money, instead of looking at these, I would suggest that you look directly at the equity market and consolidate. The strategy I use, and I encourage people who listen to me to use, instead of looking at these bond funds, if you're interested in getting to a point where you're able to buy a bond, is to passively invest in the Nifty 50. Whatever you can invest, keep investing passively, and when you reach a point of around 1 lakh, at that point of time, you can liquidate that fund which you've been collecting, the Nifty 50 passive, and move it and buy an Indian bond. So this is the way I would suggest if you're in India. While in the US, there are other high yielding bonds such as SCYB, which is a bond fund, which ETF, which focuses on corporate bonds, which has higher yield, but the risk is also higher. Then you have the SHYL. That's a short duration high yield bond that gives high yield but limited duration. So be careful over there too. Then you have the junk bonds, which is a very short term, which is the SPDR Bloomberg short term high yield bond, which you've asked me about. These are the bonds you guys have asked me about, so I'm not recommending this. These are my views on these bonds. All these are very short term, high yield, and extremely volatile. So be careful, because high yield means more credit risk, and more credit risk is never good, especially in this current environment we are in. What I would say is safe if you're looking at short duration is something like the iShares Core US Aggregated Bond ETF. That is good. And the BND, which is the Vanguard Total Bond Market ETF. This is a much safer, broader bond fund, and if you're looking at it long term, this is something I would suggest you can look at. This is what MJ Gautam Hariharan have been asking, which is which US stocks ETFs are good now, and can you make a PATAS list? Well, MJ's PATAS list has Alphabet, Berkshire Hathaway, BYD, Coca-Cola, Johnson & Johnson, Merck, Novo Nordisk, RTX, that's Raytheon, and Taiwan Semiconductor, TSM, Toyota Motors. Okay, this is a good list. If this is a list you have, I don't see anything wrong in these lists. If you're sipping in long term, it's a good list. In terms of making a PATAS list for the US, it is difficult to make a PATAS list for the US, because the investment approach I personally take to the American market is not on a daily basis or a weekly basis. It's once in a month, or unless when I do see a reason to dip in the middle of the month. So I don't have per se a list like that. So in the beginning of the month, I see out of these companies like what you mentioned, what is their value and the budget I have, and I allocate according to that. So I will try and get some kind of a list going, but meanwhile do reach out to me on WhatsApp or Instagram. Let's have a conversation and see how to figure this out together. In terms of ETF, Vanguard S&P 500 ETF large cap stocks in the US is good. The Invesco QQQ Trust, that's the top Nasdaq 100 tech heavy exposure, that's also good. Then the Vanguard Total Stock Market ETF that covers the entire US market, that is good. Then the Schwab US Broad Market ETF, similar to the Vanguard VTI, which is the Vanguard Total, but it's a lower cost, I think, if I'm right. So these are all very good funds if you want to stay invested. But volatility in market is normal, and we are long-term investors. All these things, what you're hearing about the president and all that, is all short-term. What you should focus on, which is long-term, is tax policies, trade policies. These, though it might change from a Republican to a Democrat, if it is advantageous to the government and the country, they usually don't pivot away from that and dilute it just because the government changes. This has happened when Bush went from Bush to Obama, from Obama to Trump, Trump to Biden, and Biden back to Trump. If you see a lot of policies which they screamed and shouted about have not been rolled back since the other party came to power. So it shows you, if it is in the larger interest of the country, which it should be, it stays, it doesn't go away. So keep that in mind when you see volatility in the market and trying to understand. Like this current bill, this big beautiful bill, which Trump is very eagerly trying to push through. A lot of the things which we see there in terms of taxation, if it does get passed into law, I don't see the Democrats aggressively rolling these back if they do come to power. Now getting back to Toyota and Honda, which we started this whole conversation with. I don't think they're laggards. It's not true. And they've been not betting everything on battery electric vehicles because of the simple reason the technology, I still think, is in incubation phase. Yes, we have vastly adopted lithium-ion batteries. I'm not talking about the car itself, the vehicles themselves. They are very cutting edge and everything. But I think the technology underlying how they are powered, the EV technology, Toyota and Honda are right in that lithium-ion batteries are not where the end is. It is an incubation. It is a step towards where we finally will reach. And where the technology is moving is towards solid-state batteries or SSBs. SSB will get more speed towards solid-state battery. We are heading towards more impetus behind this because it's a safer technology. right? It is less volatile. Lithium-ion battery has liquid gel-based electrolytes, while solid-state are ceramic and polymer-based. And the energy density of a lithium-ion battery is around 150 to 200 megawatts per kilo. And solid-state batteries are almost 300 to 500. And the minimum charge time for lithium-ion is around 30 to 90 minutes. Well, SSB is charged much faster than this, probably around 15 minutes. And the life cycle of a lithium-ion is 1,000 to 2,000 cycles, where solid-state batteries have a life cycle of 2,500 to 10,000 cycles. And of course, lithium-ion batteries are highly volatile thanks to their liquid nature. They can catch fire, while SSBs are non-flammable. So it is where the future is. And Toyota has been spending a lot of money on R&D. Panasonic has been spending a lot of money on R&D. Even Tesla, through their investments in other companies, have been pushing for this. So everyone knows this is where the future is. So the approach Toyota and Honda are taking are more pragmatic, and I think it's the right way to go. It's a more cautious way of deploying capital, and spending on R&D on this is a much better thing to do, because the Japanese have suffered this kind of thing in the past, where they thought they had the cutting-edge technology and they didn't, and they've had success also. In the case of Betamax, where they thought that the world will be adopting that, though it was superior to VHS, didn't happen. Betamax flopped. All that money, R&D and everything, capital which was put into it, went down the drain. At the same time, something like the Walkman went off the shelves, and it became something which has become an icon, much as the iPhone is. So this, they do have a tendency of realizing where it is, and this pragmatic approach is great, because if they get it right with solid state batteries, they will leapfrog all of us into where finally electric vehicles will go sit. And this is the right approach to take, because the current global scene, if you look at the strategies, the mature markets are really slowing down. The European markets are slowing down, the American markets are slowing down for electric vehicles, and where the market seems to be growing and growth prospects are developing markets like India. But here in India, the problem is, if you look at it, the infrastructure is very weak when it comes to charging stations and charging points. So the best way to straddle till the technology develops solid state batteries is to go hybrid, and them pushing on hybrid seems to be the best solution to straddle between this world to the next world. And I think they've got the mix right, and Toyota themselves seems to be in pipeline to launch around 15 in-house electric models by 2027. They are getting aggressive because their SSB technology is getting better. They seem to be feeling that they're close to it. Meanwhile, Honda, they've said they pushed their whole electric vehicles, game plan to the market to 2030s, and they're focusing more on hybrids in the short term. And I think this is the right way to go, because the electric vehicles are slowing down, regulations are becoming more strict, and infrastructure gaps, if you look at it in a place like India especially, it is good that they take this approach of focusing on hybrids, because Honda is already dominating in India, especially in the two-wheeler segment, if you pay attention to this. And them approaching India with this approach is the right way to go, is what I also personally feel. Because once the SSB comes from Toyota, which is not a goal, they don't want to dominate the market now. 2025, they're letting it go. So by 2030, they'll be ready to really push and dominate the market. And if you look at in terms of sales itself, Toyota sold already last year 9.3 million cars, while Tesla's only done around 1.8 million. So that still shows you Toyota is still the world's number one car manufacturer and supplier, while Honda dominating Indian two-wheelers also shows you how they're able to capture the market and sit on it. So this is the best situation for a value play, is what I feel, because if you look at it, where they're positioned, thanks to Mr. Market thinking they're laggards and they don't have anything in the pipeline, this has pushed their prices down and valuations down to a point where it is something we as classic value investors should definitely be looking at, is my opinion. Because if you look at the current numbers, ending quarter March 31st, 2025, Toyota's operating profits were up. Their net profits were down thanks to the volatility of the dollar and yen, but they're still maintaining the world number one in terms of ranking. And if you look at it in April to June, their operating income has improved because the volatility in their foreign exchange has slowed. And the EPS, if you see from the last 12 months, is at $4.73. Revenue is also up, and the free cash flow is standing at $1.56 billion, if I'm right. And if you see in the US, it is traded as a Toyota ADR, which is a ratio of 1 to 10 Toyota Motors. They're currently trading at $185 with a discounted cash flow, I would say, at $138, relative value at $250, and intrinsic value at $194. That means they're trading under at 6 to 7% under intrinsic value, which is a great entry point if you're a long-term investor. Meanwhile, the flip, if you see Honda ADR, that is 1:3, their ratio. Currently, they're trading at $29 and their discounted cash flows at 95, and their relative value is at 42, and their intrinsic value is at 68. So they're almost under 60% intrinsic value, which is a phenomenal discount. It's available in the market. So, like I said, if you are looking at this, remember there are some red flags to keep in mind. In the short term, these tariffs are going to affect these companies a lot because America is one of their largest markets. 60 to 70% drop in profits is expected, is what Toyota and Honda themselves are saying. Slowdown in China is not helping. The EV future, like I said, is a wait right now. So taking all this into consideration, you should be willing to wait for the turnaround to happen, and it's going to take time. 2030 is not today, it's not tomorrow. It is a good 5 years away. 2025 is where we are now. So are you willing to wait is the question. Are you willing to understand where the moat is, where the business is, and then see the value in it? If you can't see it, then please refrain from any of this, because more pain is there in the short term. Short term, I mean in the year to two, before things start getting better. Are you willing to sit on the train for that long is a question only you can answer and I cannot. Am I looking at Toyota and Honda personally? Of course I'm looking at them. Every opportunity I do get, I do try and invest what I can, when I can, and make sure I don't miss the opportunity. So this is the main reason I wanted to share this with you. So what is your opinion? What do you think of what I said? And where do you think Indian companies like Tata Motors, Mahindra stand in all this? I do believe Tata Motors are also working on solid state batteries. Like I said, they bought a British company and they're doing something which I did speak about in another video some time ago. So Indian companies are also making R&D effort and play into this. So let me know what your opinion is. I would love to hear it. Are you investing or not? Are you waiting and watching? What do you feel like is the right way to go about this? I hope I gave you some clarity on the questions which you had. Do put your questions down below. I will try and answer them and get back to you as well as I can from here in Bangalore. Thanks for watching the video. I hope you had a wonderful day today, and I'll see you again tomorrow with another one. Good evening.